Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. First thing we're looking at is chart of the mini S&P market up 57 points today. Is that not amazing or what? Up 57 points off a low of 1140 yesterday. That's 120 points in about a 24-hour period. I just looked at that market dropping around 1140 yesterday. I was just thinking to myself, man, what a great buying opportunity. That is one good buying opportunity. Little did I know that it would be 120 points in a matter of 2 days, but very exciting stuff. Very good for the market in general, just for the economy, for the market. All the announcements we had yesterday really leading to some strong moves higher. Tried to close that gap today, but just barely got it closed in the E-mini before we got a bounce. Could portend that's not actually a good sign. If we roll over lower. If it's just a half retrace and we go higher, then it's a great sign. But where are we now? We look at our indicators, our proprietary indicators right there, and we see that we are bullish, fully bullish across the board in our indicators, suggesting that this move does have legs, is sustainable, and should go higher. And that's from a technical perspective. We already know the economic perspective, suggesting that the market's going to go higher based on the announcements yesterday that the government's essentially gonna bail out a lot of people. So you got the United States government behind you. What better? What more could you ask for? So if we look back over Monday, Tuesday, Wednesday, Thursday, and Friday. This is Friday the 19th. We're at 1260 right now. We had obviously bearishness. This is all red. So from a price technical perspective, bearish. The trend was lower. Fed, what a week. Fed to 3.7 million people without power. We were one of them, having to scramble just to maintain system integrity the whole week. It's been an interesting week. But then you had the Fed day right here, just a crazy move, a huge drop. I mean, you don't really see it on this chart, but these moves are absolutely incredible. I mean, this was like a 20-point drop in the S&P in a matter of minutes. Just very wild stuff. The market did recover. If you look, one would argue that the reason for the recovery is this divergence. We had this extreme sell-off the prior day, had the opening gap lower. We did see the positive divergence here on the opening gap lower, so definitely a strong divergence there. Once we saw some green, definitely a good buying opportunity. We did have that hiccup, but the market closed at the high of the day on that turnaround Tuesday session, moderate in nature, but the trend did roll over the next day. Generally on Fed days, we don't look at the market to the post early session of the following day, so right around here, and this would suggest bearishness, which we did, of course, get a close at the low of the session. We did have the acceleration and bearishness here, and here, extreme bearishness there. And we got the close at the low, but of course it was very choppy, very whippy. Got a little bit of a gap open higher on Thursday, but as you can see, once the market started to trail off, it's just not going to happen. We're just not going to see the U.S. stock market take off like that or just fall to the doldrums. It was actually reminiscent of October 12th of 1998 after the Asian flu that we had, and I believe that was LTCM, and Russia was having some big problems, and we had the intermeeting Feddies, 3/4 of a basis point, maybe. One of you guys could probably correct me on that. But the move is certainly reminiscent of the October 12th move in 1998, just huge meteoric rise. But one could argue here again, we see a bottom and we see a strong divergence. Extreme bearishness the day prior, but very strong divergences we saw here. And once you start to see, certainly green, but once you start to see this up move and this up move right here, that would suggest you buy. And of course, what a move it was in the market just the day, and to carry it forward up another 50, 60 points today in the S&P, things are just really good. So there you have it, and still bullishness. So that's the intraday look. We'll go ahead and switch over to a chart of the daily and see where we are. Well, we're right at the mother of all trend following resistance levels, and we'll bring this down, clean that up a little bit. Got our strategy runners there. show you a couple portfolios. But right there at this very key, very significant blue line, as you can see, we've tried to get surmounted this. We did have the break of the trend. We've had the retest from the bottom side where we went, said, sell more stuff. Of course, we've remained officially bearish. And actually, on an official market timing basis, yeah, we did give up about 120 points, but we are still officially bearish. Of course, obviously, we have these discretionary moves and systematic moves in our portfolios, but on an official market timing basis and from a macro standpoint, we are officially bearish until we break above 1260. Well, why did the market stop here? Why was it magnetized to this level? Well, that's about the most key level you're going to have, at least for our intents and purposes, and so that's where we stopped. So obviously, we are bullish on the intraday perspective, aforementioned, but you know, this is a very strong resistance, but that was a very key piece of news that we've had over the last few days. And as you can see, we're going to just hold right there probably for a little while. But if we break above, obviously we'll just switch to bullish because, well, of course, we are short-term bullish above 1226. 1225 or so. So intermediate term neutral in terms of momentum, hard right turn higher. This should be short term bullish. It's not because technically we are bearish. At best, this should reach, at worst, this should reach short term neutral. Actually, I forgot to change that, but a hard right turn, or sorry, a hard turn, a 90-degree turn does suggest a change in momentum. From a directional movement perspective, still bearish and supportive, but obviously, as you can see, this kind of gets caught when we have these parabolic moves. As you can see, the ATR super high, just incredible ranges we're seeing. Probably our best trade yesterday. I wanted to just show that to you guys, show you guys that trade real quick. Day Trader 7.0. This is actually one of our oldest strategies that we've had, probably for about 5 or 6 years. It was enhanced, changed a little bit, became the S&P Day Trader 1.0, but such a robust system. Had to work it back into the mix after a short hiatus. Day Trader 7.0, it's now called, trades the EMD contract. Buys at 740 yesterday, closes at around 775, we'll call it. 774.50. So an incredible 35-point move in the EMD contract, $3,500 a contract. Just really an amazing move. The rest of our stuff has been a little bit choppy. The grind, chopping around a little bit. Little bitty short thing. It's long again today. The Day Trader 5.0, a little bit choppy. Did catch a nice winner there. On the new Russell contract, our systems have just been outperforming. MCM long there, that's the EMD, of course long right there. SEM, just huge moves trading the new mini Russell contract, 690 to 750, just amazing moves trading the new Russell contract, 690 again to 750. Evo actually trading the new Russell contract, traded from 690. The system goes up to about 715. So really impressive moves. It goes long again today, trading the Russell contract. But actually, we are running out of time. I cannot believe that. I wanted to go ahead and show you guys this performance. This was actually of this morning, so it's come off a little bit. Out in the lead, the MAPDT over the last 40 days up 182.6%. Just very impressive moves. Yesterday, black up 11,000. This morning it was up. Actually, the Delta 20 has been the star performer, up $11,000 today. The Delta B up 31.42. You can subscribe to either one of those if you're interested by going to the website. Actually, we can just pull this over and minimize that. Of course, that's still there. 78.25 is the Delta B number today. 12,000 is the Delta 20 number today. So just very impressive portfolios there. But the MAPDT over time is up 182 is the leader, up 182.6%. Had a banner day yesterday, thanks in large part to the Day Trader 7.0 that we've mentioned. So very impressive gains. If you guys are interested in the Delta B portfolio, up 91%. That's a moderate portfolio in terms of risk. Go to the website. You can click on MAPDT version 2.0, subscribe for $1,500 for 3 months. And if you guys have any questions, feel free to go to the website. Let us know. Hope you guys have had a great trading week, and we'll see you next week.